It's going to take over our lives, and it should, because it makes everything a lot easier.
It's the market wave that will eventually touch every stock you own.
I think it's going to be the biggest wealth creation event in human history, period.
It might be high already, but there is still plenty of wealth to be made on the AI boom and the changes it's bringing in the entire economy.
AI will find absolutely every stock in your portfolio. You can't avoid it.
Dan Ferris with Stansberry Research shares how investors can really profit from all the changes still ahead from AI and how to stay safe from the many waves of volatility that still might come. Let's dive in. Today, we're continuing our Vegas series with Dan Ferris with Stansberry Research. Dan, thank you so much for giving us your time today.
You bet.
I love the topic. You just got off the stage at the conference here and talked about investing in AI and how much it's really going to change the entire stock market, and it's just getting started. So let's talk about how is it going to change everything?
I think it'll be very similar to the internet. People got really excited during the dot-com boom, and everybody said, wow, this is going to change everything. And there was a huge bubble, and it did result in a big bear market, but they were right. It found every business and every human on the planet. You can't live without the internet. You know, there's probably some tribe somewhere in the jungle, right? You know, you can name a few people on earth who aren't using the internet, but it's very few. And you could argue that, you know, it touches everyone directly or indirectly, every single human. Now, that didn't stop a bear market from ensuing and wiping out all the unsuccessful entrepreneurial experiments that were conducted during that time. Times of great innovation are like that. Okay, so it made perfect sense. Everything that happened made perfect sense. The market got it right on the way up, and it got it right on the way down, and it got it right since then. From the beginning, what I'm calling the beginning of the internet boom was 1990, when Tim Berners-Lee of CERN released the first web browser. Now, most people know about Mosaic or Netscape Navigator. They came along in 1993 and 94, but let's just call it 1990. US stock market was worth $3 trillion. It peaked at a value of $15 trillion in 2000. A five-bagger in 10 years. Since the top, not since the bottom of the bear market, since the top, we've added another 55 trillion, and there's not anything in your portfolio that isn't touched by the internet. And if you just name, you know, three of the top businesses, Amazon, Alphabet, and Meta Platforms, collectively worth $7 trillion, don't exist without the internet. An enormous amount of wealth was created. And even the companies that laid all the fiber optic cable, the analogy is being made now between them and companies that are building AI data centers. Lots of capital, no return in sight, just money spent on something that's not going to get a return. And, you know, in their case, the companies wound up being frauds, and they were burning cash, and they went bankrupt, and some of the people went to jail, but they really did lay all that fiber optic cable, and that's real wealth, and we use it. And from 2000, from the peak to about 2022, I think it was, internet usage climbed 1,000-fold, and those telecom revenues were cut in half because it just got cheaper and cheaper and cheaper and more abundant. Cheaper and more abundant is a fairly good definition of wealth creation. So that is happening now. And if you are not already having daily conversations with your phone, with ChatGPT, you will be very, very soon. It's going to take over our lives, and it should, because it makes everything a lot easier.
Yeah, I think this argument about talking about the comparison of the AI boom with the dot-com boom, but even bigger. We've heard lots of analysts out there saying, as much as the internet changed everything, like you were just talked about, AI will be even bigger. Do you believe that too?
Yeah, I think it's going to be the biggest wealth creation event in human history, period. It's already rhyming with the dot-com boom. Right? That's already happening. If I'm right, we're in the earliest days. We're in the early days. And the cool thing about this is plenty of money will be made in the boom, and I believe it will become a massive bubble, and we will get a massive bear market. That's just how these things work. And then the enormous money will be made, just like in the dot-com boom. And most people, if they're just like 401k contributors, the internet found every stock in their portfolio that you can't avoid it. And AI will find absolutely every stock in your portfolio. And I gave the example, my extreme confidence got a big notch up last week when Sam Altman came out and said, starting in December, ChatGPT will allow for a wider range of content, including what he termed erotica, adult content. So the adult film industry has been a massive early adopter of anything that works and anything that makes their product faster and cheaper to create. VHS, camcorders, the internet itself, DVDs, smartphones, online streaming, live streaming, and through the course of my research, also 3D and virtual reality. I don't want to know the story. I don't want to know. And they've been using AI for 10 years, but this puts it on everyone's desktop, so everyone's a content creator. So that tells me that, ubiquitous, daily, just completely integrated usage. And one of the other speakers today got it right. You're not typing in it, you're talking, right? So good talkers and good writers, because you will be writing your queries on your laptop or whatever, but with your phone you'll be talking. So good talkers and good writers are valuable people. Thank God, because that's all I know how to really do. And that's the kind of world we're looking at. And it's coming at us at a blinding rate of speed.
It's coming, and it's already here in some
It is.
aspects.
It's here.
But I think the thing to point out what you just said is that it's just beginning. And I think that that's what investors keep questioning. We know that that bubble is possible and, like you said, likely to come.
Yep.
Do we think that there's still a huge amount of wealth to be generated in AI investing?
Absolutely. Like we have, it's a drop of water in an ocean. What's happened so far is nothing compared to what I expect will happen. And I mean every aspect of your life. You won't be able to escape it. And already, if you use the internet now, you're already, AI is already in what you're doing. Customer service, well, we all use customer service because we all shop like crazy now. And AI is there, and a lot of other places. It's just, if you use Google, well, what happens on the top of Google right now? There's AI on top of it, right? And that's kind of primitive compared to what I believe is coming. So,
well, let's talk about some specifics here too, because like you said, it's going to touch every stock in the market. So no matter what you're invested in, eventually you will be invested in AI. And I think that's a really great way to look at it, because it seems like the direction we're going. But what are some names that you see surviving any kind of bubble or burst we might see?
I think Apple has a really good chance to get its head out of its rear end and create that agent for your phone. They're not doing it. Maybe they can acquire it from someone, they can buy the talent and do it and bring it in. Because Siri is not what I'm talking about. I'm talking about something that makes Siri look like an idiot. Something that can make your appointments and your restaurant reservations and tell you how to, put an addition onto your house and all kinds, just anything you can think of. Apple has a chance to do that. I don't know if they'll take it. It's an expensive stock right now, but it's a phenomenal business. Alphabet is probably the best of the large AI developers. And Microsoft, the world is probably not going to stop using Excel and Word and Office. And they'll build that capability in there, so instead of just typing all the time, you will be talking to Excel and Word and PowerPoint and all the rest of it. And, if you own, pick any, Costco. If you own Costco, well, they're probably going to be using a lot more robots. They're going to build all kinds of stuff into the customer experience online. Now, if you're in if you're a member of the gig economy, you could be seriously disintermediated, because when we get cars that are, we have full self-driving now. You can get into a driverless car in big cities and go wherever you want to go, and it's fine. And eventually, humans won't be able to buy car insurance because machines will drive cars better than humans ever would be able to. And the gig economy is people driving their cars. People have this asset and they're using it and they're delivering things. And so maybe that'll be disintermediated. Maybe truck drivers won't be a thing anymore. I know that your viewers hate this, but it really is true. You don't need me to give you tickers. You already have them in your portfolio. I'm serious. Go through. If you own the S&P 500, just start at the top. With NVIDIA and Meta and and Microsoft and all the rest, it's not really hard to figure out who already knows how to do a lot of these things. And one thing I'm doing for my readers, I don't think we've recommended, I get a lot of help from other people, a pure AI stock. I'm doing my first one in the next issue of the Ferris report, the October 2025 issue. And I don't think that you have to. I know there's a company called Comfort Systems. The ticker symbol is FIX. Well, they just do heating and air conditioning systems. Well, what do you think data centers need? They need massive heating and air conditioning systems. Anybody who's in commercial building, I think it was Jensen Huang said, We desperately need more electricians and plumbers and carpenters. Companies that serve those people are probably going to do pretty well because you need more of those tools. There's going to be plenty of people making tons of money, and you don't have to work very hard to do it. You won't. The wealth creation will find your portfolio.
I think we've already seen that this year with just so many different stocks. Seeing
Right.
so much growth this year with the market as high as
Right.
it is.
I'm glad you mentioned this year. It's worth mentioning that it's really crazy that gold's gone up 30% in 2 months. That ain't good. That ain't supposed to happen. Something's up in the world. And when a chart goes that ballistic, and everything's gone up, since the tariff tantrum in April, since the April 8th bottom, everything has taken off like a rocket ship. So what happens when that happens? Well, you get corrections. When the price chart goes ballistic, it doesn't resolve by sort of petering out and going sideways. It goes ballistic and then it crashes either back to trend or below trend. Now, people gave you these warnings. Alan Greenspan gave us a warning like this in December of 1996. Well, there was some unpleasantness around the crashing of long-term capital management, the blow up there in August of 98. The Fed got involved and fixed it, and the market took off like a rocket ship. So, it's not a straight line to the top. There's unpleasantness, I guess, is the way to put it. There's volatility on unpleasantness in these episodes. Not a straight line to the top, even if it is a booming, hugely booming AI market that I expect to materialize. There are reasons to expect volatility. Passive investing is a reason to expect volatility. Passive investing, basically, people putting money into the S&P 500 in their 401k every single week. At this point, they are putting roughly 40% of all their money into 10 stocks. The 10 largest stocks in the S&P 500. So what happens then? Well, every time they put it in, the market cap gets a little bigger, and that means next time they put a little more into it, and then it gets bigger, and then and it's just, where does this end? Well, I don't know where and when it ends, but I know how it ends, and it ends with the whole trend going the other way, right? Right now, the algorithm is receive $1 of capital, buy $1 of equity. That's what people are doing with their 401k. At some point, the algorithm reverses, and they say, they demand $1 of cash from their 401k. They're not contributing, they're taking it out now. Demand $1 of cash, sell $1 of equity. Well, what does that do? That shrinks the market cap, and you got to sell more and more equity on the way down. So this can reverse. The algorithm can reverse. That's the scariest thing to me, the simplest scary thing about passive investing. And you can see, when we get these orange swans, right? We had black swans, we have orange swans when Donald Trump talks, and the market goes, if he's talking about China tariffs, the market goes down, and if he's waffling, it goes up, or whatever, he can make it go in whatever direction he wants. Basically what he's doing is he's pushing around those 10 stocks, and they're pushing the whole market around. That's just one reason why I think we can continue to expect some volatility. And even if the AI boom rhymes with the dot-com boom and we're in early days, that doesn't mean it goes straight up like a rocket ship for 7 years.
And that's a really great way to look at it. And I know if you want to learn more about Dan's bearish approach on the market, he has a special report where he dives into what could happen with the market and how investors can be prepared for that inevitable crash and the turnaround that we will see at some point in time. So if you want to learn more, check out his special report. You can scan the QR code now or click the link right in the description of this video to get that report and learn more about that bearish outlook and how you can handle it as well when that happens. I think let's end this with one final question on just what investors can do. If we know that AI is going to change everything, that every stock in the market is eventually going to be touched by AI, how can investors be prepared and make sure that they can actually profit and continue to profit no matter what those waves might come in this AI wave?
Well, so that's really two questions, the waves and the AI. AI is going to find you. Learn how to identify a great business, consistent cash flow generation, consistently thick, or it could be consistently thin, but consistent margins of whatever thickness. A good balance sheet, a great balance sheet would be even better. Those companies tend to reward shareholders with dividends and share repurchases, though that's not always there. And they tend to get really good returns on the capital that they employ in the business. ROE, ROA, ROIC, those kind of numbers. When you see a consistent margin, that's an economic signal. The market is telling you this company is doing something special, and they do it over and over again, and their customers are in love with it. So keep looking for that. The market's going to, AI will find those companies and make them even better. The other thing is preparing for the ups and downs, the volatility. And I continue to believe that diversification actually is a good thing. True diversification involves holding cash. Cash is the ultimate diversifier. A couple years ago, when T-bills were finally yielding like 5% after yielding nothing for more than a decade, I got on the stage here in Vegas and I said, investing is back, because you had this risk-free asset that you could sort of anchor in your portfolio and then say, okay, show me something that's better risk reward than the 5% I'm getting here. Because I'm not going to lose money and we're going to make 5%. Therefore, you have to present me a better proposition than that, right? So you want to do that. You probably want to own some T-bills. You probably want to own, just have some cash available for a drawdown. And I do like things like gold and silver and managed futures. There are managed futures funds. I've recommended DBMF. That's a good one. And CTA is another one. Either one of those are fine. I would say, both of them, split the position in half. Hold a portfolio like that, you'll be ready for anything.
Some good advice for our investors today. Dan, thank you so much for your time today and for diving into how this AI could really change the whole market. I'd love to hear from you. What do you think about the concept of no matter what you invest in, you're going to be investing in AI? I'd love to hear your thoughts on this discussion in the comments. And also, if you are also a little bearish, waiting for the floor to drop out on AI, I'd like to hear your thoughts on that too. Thanks for joining us, everyone. And as always, happy investing.